Hey everybody, it's Pete Ranzulli. Welcome to Stock Trading Pro today. Well, the stock market crash is in full force right now. So we actually have two hurricanes going on right now, one down here in South Florida and one in the stock market. Obviously, today we want to wish our best to everybody who is especially on the west coast of Florida right now. Hope you're doing okay. Today we're going to get into it. We got a lot to cover today. Obviously, today's mission is to help you remain calm while the stock market crash, the bearish trading that's going on right now is in full force. But we're going to go through 7 steps today. We're actually going to do a lesson, which is a trading plan template. And I'm going to give you the opportunity to download this entire template. It's roughly about 6 pages from start to finish. So if the stock market right now has you confused, if the stock market has you trading with scared money and you can't make a decision right now, or if you happen to see all the volatility that's in the market and you're salivating and you're really liking the opportunity, this is for you also, because it can always go up another level by being prepared. So I'm going to give you a little sneak peek of what we're going to talk about here today. We're actually going to break this down today. We're going to cover a trading plan template. We're going to get right into the weeds. This is exactly what I did when I had my trading floor in New York City. And then we're also going to break down something else, which are these 7 steps to determine how to put yourself in control of what's going on in the market. So we have a lot to talk about today. This is probably a video and a trading education that you're going to watch more than once and take good notes. And I'm going to give you the opportunity to download everything we're going to cover today. Today's a day I really want your participation, whether it's live on the live stream or in the comments below if you happen to be watching this on the replay. One of the most passionate things I have is I want to help, but in order for me to give you customized help, you need to participate by asking questions, and whether it's live or in the video below. So we'll be right back. I just got to put up this disclaimer and then we're going to get started. Okay. Okay. So thank you so much for being here with me today. So obviously the stock market crash has a lot of people worried right now. And I want to give you some trading experience that I have from both the crash of 2008, the financial crisis, as well as the .com crash in 2000, when I actually first started trading stocks full time. Actually began trading. First time I was in the stock market was April 17th of 2000. So you can look that back up. It was actually a Monday. I was all wide-eyed and couldn't wait to get started. Had no idea that the .com crash was over. Everybody that was making a fortune was now in a panic mode, which is exactly why I want to do what we're going to do today. We're actually going to break down 7 steps, and then we're going to work our way into the actual trading plan formula. So these are the steps we're going to talk about. And this is the template that we're going to talk about. So I want to be clear about this. This template is how you remain calm no matter what's going on in the stock market. In some market instances, you're going to use it to preserve precious capital. Other market conditions, you're going to use it to make more than you ever thought possible, simply because you were ready to make those decisions. Now, if you happen to be in the market right now, and let's say you are active and you're trading stocks, you're finding the best stocks to buy now, maybe you're even short selling stocks. One of the biggest challenges that we're seeing right now is with the amplified volatility, with the volatility index, the VIX continuing to go higher, stocks are moving back and forth much quicker. And some of the members of our community, maybe you here as well, are in the right ideas. You're buying the right stocks or you're short selling the right stocks, but you're getting bad entries. That's something I want to talk about before we hop into this. The only way to get timing at the optimal entry for whatever stocks you're involved with is narrowing your list down, because your current trading skills and your results are a perfect reflection of your skills. So if you're in the right ideas, but you're late, that just means that you need to focus just a little bit more on a smaller list so you can cycle that keyboard, cycle the list. And when you have the entries, you're on top of it instead of seeing it a little bit late. So I just wanted to start out with that. The first thing we're going to do is we're actually going to break down what we have here as far as the 7 steps. Now, one of the biggest things I want to talk about right now is we have to make a very big distinction between trading and investing. That's the big thing I want to talk about right now. And if we can really bring this into focus, trading is short-term price action where you're doing what's known as tape reading. So we're going to discuss some tape reading principles today. Investing is a little bit longer term, matter of fact, a lot longer term, where you're mostly talking about you love the company, whether it's a value play that you're buying for appreciation, or whether it's a dividend play where you want that company, let's say like Apple, with all that extra cash that they have, you want to give them back to you in dividends. So I'm going to recommend a book that has been on my bookshelf for a while. Actually, it was recommended to me by somebody who was one of the managers of my trading office in New York City, Mario Carrillas, a super guy. It's this book right here. And I'll just pull this up in here, right? So there's a lot of different things that you can look at in the stock market from an investing perspective. The reason I'm recommending this book is because it strips out all of the technical jargon and the financial data that can kind of make investors' brains basically melt. What Warren Buffett does, and the author of this book, and actually the author of the book, you can see it on the bottom there, is Robert G. Hagstrom. He does an absolutely fantastic job of boiling down the thought process of what Warren Buffett looks at. Now, obviously, Warren Buffett has more than just what you can find in this book, but he talks about, are you buying a business? And one of the biggest things is that's going to be tested right now for you. If you have investments and they're declining right now, you really have to determine why you're in that idea, and is the idea still valid from an investment perspective? If you're in the stock and you've bought the stock and you've become a partner in that stock by buying shares, and it's a long-term play where you're looking at dividends and you really like the company, you think that the stock market has a blip right now and it's mispricing the company, then honestly, at that point, you're going to end up holding it because of those reasons. If you are buying it for capital appreciation, that's where you have to maybe make a different decision and whether or not you want to sit in that, because not all stocks produce dividends. So one of the most important sections in this book is where he talks about buying a business. So if you think about the big part of that book is he talks about if there was no stock market and you didn't have quotes, can you determine if you would like to own that business and be a part owner? So there's two different reasons. Capital appreciation, if the stock does have quotes, which obviously we do. And number two is the dividends. So I highly recommend this book. So what we're going to do, though, is I want to hop on over here and I want to go through these things. Now, are you trading or investing? Once you know which of the two you're doing. Now, trading, generally speaking, again, just kind of a global statement here, but I think it probably applies to most people on this call right now. Trading generally involves tape reading, which you do on the charts. So we're talking about tape reading, we're talking about the charts, we're talking about technical analysis, we're talking about technical analysis most likely in multiple time frames, helping us make decisions. So the way that we read technical analysis, and whenever we're looking at stocks, we try and put the pieces together from the monthly time frame and determine how much buying and how long it's been going on, the weekly time frame, and then we kind of fine tune our entries on the daily charts. So trading is much shorter term and technically driven by the charts. So again, let's just get into the 7 steps here, and we're actually going to get into exactly what's going on. So number one is take control. There are a lot of people right now that have been reaching out to us, whether they're joining our boot camp or just reaching out for help in general, whether here or in the Facebook community, scared out of their mind right now simply because they are having a problem making a decision. Now, again, I've gone through 2000, I've gone through 2008. It's scary. And obviously a lot of us right now have gone through what happened at the beginning of 2020 when the market crashed with the global situation that happened. It's critical that you take control. Now, the number one way to take control is to really understand why you're in that trade. If you understand whether it's a trade or an investment, that means that you need to either know or define your risk. Now, I want to say this very, very clearly. If you are hoping the market is going to come back right now and your vision of the market is, well, it always goes up, that might be true over time. But I want to talk to somebody very specifically. If you are at or near retirement age right now, now, again, everything I'm talking about here is for educational purposes, all right? You need to make your own decision. But if you need the money in the next 3 months, you need the money in the next 6 months, maybe even in the next year, you need to step up and you need to really answer some of these questions is, am I taking control or am I hoping the market comes back? What is my edge? Maybe your edge is being defined by you. Maybe it's being defined by your financial planner. Either way, it's critical that you know why you're still in those positions. And quite frankly, for some people, especially those in the latter years where you're either getting towards retirement or in retirement, sometimes your edge could just simply be diversification, where you're not 100% in stocks. Maybe some's in money market, maybe some is in insurance products, we're not going to get into that today, but you need to know what your edge is. If somebody else is managing it for you right now, you need to ask them, why are we still in these, and let them build an argument for that. And if the argument makes sense, then you know your edge. Okay. So working our way across that, you also need to know your risk. Is your risk defined by stop losses over a period of time in trading by reading the charts? But more importantly, dollar risk per trade, per month, per year, per account, per portfolio. How much risk are you willing to accept? And here's the thing, before you make a new decision. You might not be at that risk point yet. You might be averaging down, which there's nothing wrong with that if that's part of your long-term plan, but you still need to know what your risk is. And I say this when I had my trading office in New York City and we were trading through the financial crash. Obviously, as professional traders, we were very aggressive with short selling at that time, and there was a lot of money to be made on the way down. But there were a lot of new people in the stock market that were just getting involved in active trading and making their own decisions by buying stocks and selling stocks. And they were really, really scared for their longer term portfolio. We had grown men and women crying, and that's not an exaggeration. So what I want to talk about here, again, just keeping with these 7 steps, is defining your risk. Once you know your risk, it's a lot easier to make decisions. Next, define your objectives. And again, objectives comes from, am I making a decision that's an investment that's much longer term, or am I trading? Most of us will either know that as day trading or swing trading. And what does that look like? Am I looking for the next hour? Am I looking for the next year? Am I looking for the next 12 years? Once you understand what your goal is for the trade or the investment, then you actually have to map out how to get there. Now, what's actually very important, and we're going to talk about this, we have an entire template that I'm going to give you through. Now, I can't express this strongly enough, and I'm on video, so I'm going to say this very clear, fully aware of compliance, fully aware of what I'm saying, that it's recorded right now. The stock market becomes infinitely easier when you know what you're going to do before you need to do it. Now, you're like, oh yeah, of course, everybody knows that. Bull. There's no other way to put it. Most people enter the market hoping things move in their favor, and then when they move against them, they pray, they average down, which is a bad idea in so many different ways. If you want to be adding to a position, you should be looking to add as you're getting feedback from the market that it's moving in your favor. That's more on the trading side of things. Even on the investing side of things, even professionals need to some sort of timing aspect where you can at least see a spot where the market has slowed down or stopped a little bit to justify putting more shares on if it's moving against. Look, dollar cost averaging has been around forever. Whether or not it's an actual good strategy or it's something created by stockbrokers to validate positions that aren't moving, that aren't doing what you want, that's up for debate. But what is not up for debate is that the longer term move in the market from an investing perspective has been up, and that's something to consider. So again, your objective within the time frame that you need or plan to hold the trade and or need the money. It's absolutely critical. So when we get into this and we start talking about this in more detail, I'm going to break this all down for you. Okay. So we're going to pop back in, and I just want to wrap up on these 7 steps. So map out how to get there. And that's everything we're going to talk about right here. Is the market matching what you need to see? So when you create your map, is the market doing exactly what you want it to? Are you looking for entries, or are you managing risk? Now, out of everything on this, all of it's important. You need to know why you're in the trade. You need to take responsibility. I put control on there, but it's really about responsibility. And this is the part here. Know your risk and protect precious capital. I'm actually going to put PPC in here. PPC is protect precious capital. Now, there's certain market conditions where the market is flying and you couldn't do anything wrong. And no matter what you do, you end up making money and the market's going up all the time. Those are the moments in the stock market to get aggressive, to have conviction in the market going up, maybe add to positions, but certainly hold on to those positions a little bit longer, because the probability, the likelihood of it continuing in that direction is good, and you're making money and all things are fantastic, right? It's when the market turns or is not doing what you want to see. And again, this is very, very important here. Is the market matching what you need to see? So let's just ask that question right now for everybody on this call, or whether you're watching the replay and that kind of stuff right now. Is the market in 2022 doing what you want, doing what you planned, doing what you expected? If the answer comes back no, which I think other than short sellers, the answer has to be it's not doing what you want. How are you making adjustments to either your positions by either reducing position size or planning to continue to manage that for the reasons that we gave before? Or are you just simply getting out looking for better opportunities, better timing into those trades? Nobody knows the future. We actually ended Monday's live stream where somebody said, I'm only talking about hypotheticals. You're damn right I'm only talking about hypotheticals, because that's what the market is. The market is all about building an argument about what we plan to do based on what's probably going to happen. That is the literal definition of building hypotheticals, building an argument about what's probably going to happen. Now, the spot in the market where most people get tripped up is here. Is the market matching my edge? There's no other way to put it. If the market is matching your edge, we can confidently look for entries, and that's buying or selling. It doesn't matter which side of the market. If it's not matching your edge, what do you plan to do? And that's actually what we're going to cover right now. We're going to get into that full trading plan template. I want to inspire you with some ideas that you might already have, maybe tweak a little bit, or maybe stuff you've never even considered, and now you're going to add that into it. So again, I'm going to say this very clearly. I know I'm on video, and I want to say this. The stock market becomes infinitely easier and fun when you have an edge, and not one or the other, and you make decisions if it's doing what you want, and you choose to do nothing or reduce risk if it's not doing what you want. Now, yeah, that's obvious, right? No, it's not obvious. Most people get emotionally tied to positions, and they turn trading into the most expensive psychotherapy you'll ever have in your life, instead of treating trading like a business. So I'm going to use John here as an example. John's with us every day, right? When you realize that you've hired yourself as a money manager, John has hired himself as a money manager. You now need to say, what experience do I have managing money, and how do I protect this account, and how do I grow this account, and how do I know the difference between the conditions for me to do that? Which now we're going to jump into the trading plan template. We're going to go through this relatively quick. I promise I'll give everybody the opportunity. So the promise here is building the perfect trading plan in 7 days or less. If you spend your spare time, you spend the night, you spend the weekend, it's only a 6-page document, but you got to go through it. 6 pages for the rest of your life to have confidence, conviction. And when you look at the stock market, you say, I know exactly what I'm looking for. There it is. And then you do something. And we're going to get into what that means in a second. Or I know exactly what I'm looking for in the stock market, and it's not there. And then do nothing. That second part is the part where a lot of people get messed up, where they trade no matter what, because they're trading for excitement, because the market's open, because they watched a YouTube video and they wanted to do something. And I get it, because you're all jazzed up. But you should only be choosing to accept risk because the probability of your edge following through is stacked. And the way we do it, obviously, is order flow stacking and reading the tape. So the first part in 2021 in the stock market was very obvious. Order flow is going up every day, 54 new all-time highs last year. The challenge is it still obvious? Is it still valid? In January of 2022, the stock market turned and started to come down in a very aggressive way. So we're actually going to take a look at that just so everybody understands what we're talking about here. I want to very clearly visualize this for everybody. And we go over here, and we're actually going to go to the daily charts. Not hard to be excited during this, right? From 2021 to 2022. It's this kind of price action where it's whippy and not clear. Like, this is really tight moves to the upside. And especially right here, we rallied, pulled back, and this failed test was broken right here. That's the moment that it was no longer valid, and that's the moment where the tape changed. And you can actually get some validation here. If you weren't aggressive here on the first move, you had the second time, the third time, the fourth time, the fifth time, validating that moment right there in the beginning of January was the change of the action. So very, very important right now. Write this down. It's more important to know what you're going to do than it is to know what's going to happen. Our job in the market is to build an edge and say, okay, great, this is probably going to happen most of the time. When I see it, I will take action. I choose to accept risk because the profit target is likely. Now, remember what I just said about hypothetical. Everything in the market is about you stacking your edge. The very definition of edge is probably, most of the time, which also implies sometimes it's not going to. So think about this, and I keep using this excuse, but it's 100% true, right? Raise your hand if you saw two trades, exactly the same trade. One trade does exactly what you thought and you made money. The same exact trade lines up 2 days later and it goes straight down. Same exact setup. That is the very proof that you need in the stock market that trading is about probability, not what's definitely going to happen. So that's what we're going to talk about right now. So when we talk about the market and last year into this year, we kept making new highs right here in this moment where we rallied, pulled back, and failed from here to here. That's called a failed test. This moment right here is where we got feedback from the market all the way into the end of March. So even as of March of this year, the market was giving us feedback saying, nope, 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 it's no longer valid. And you needed to have that mapped out to say, what does it need to look like in order for me to make a decision? Is it still valid or has it changed? Which is now we're going to get into the trading plan template. This is where we're going to really start breaking this down. If done properly, you should be able to have a trading plan written for yourself within a week. Not even a question. All right. By the way, if you don't know, I had a trading floor in New York City. I had 300 people trading my capital. If you want, look me up. Keystone Trading Group was the name of my company. We were on 457th Avenue. We get a lot of people all the time asking, was that true? That's 100% true. You see my name down there in the corner over here. Look up my name, Google it. Keystone Trading Group is the name of my firm. This trading plan outline that I'm about to give you is the outline that I've made my traders work their way through so we could build objectives based on their personal goals. So what I'm going to do after this video is I'm going to post this PDF. I'm going to put it inside the Facebook group. So you just have to hop on over to the Facebook group, which you can find that link below the video as well. And a member of my team will reach out and give it to you. Okay. So trading plan is an outline successful traders use to keep focused on decisions with a high probability of profits. Now, remember, again, this is not about what's definitely going to happen. It's about what's probably going to happen and what you definitely plan to do. Very important, all right? The trading plan also eliminates trading scenarios that do not meet your edge. If you take nothing else away from everything that I'm talking about right now, these first two sentences are very deliberate about what it's deciding for you before you need to make that decision. Now, one of the biggest and most important things that people miss is money management and risk management that match your skills and your resources, okay? So what does that mean? Money management means how much are you willing to risk per idea? Risk management is how are you going to manage that trade? So in other words, are you building a position? Are you getting out at the exact spot? Are you looking to add to a position? Are you looking to scale out? That's the risk management part of the trade. The money management part of the trade, generally speaking, and the way I teach it, is a percentage of the money you're allocating to each idea. So I'll just use some round numbers. Let's say we use $50,000. You have $50,000 in your trading account or $50,000 that you're willing to buy, and you decide you're going to allocate that $50,000 to two different positions. So now you have $25,000 per new position that you're looking for. From that $25,000 each position, generally speaking, you will take a percentage of that money. So I'll just use a round number just for argument's sake. Generally, 2% of the first 25,000, 2% of the second 25,000. Now, here's where it gets really fun. 2% of 25,000, you have $500 risk on that trade, $500 risk on that trade. So now you are looking at two ideas that match your edge, and you're increasing the speed that your edge will play out, the likelihood, right? That's only the first part. Now you need to determine how many shares. And this is a problem that a lot of people have is they don't understand. The dollar amount is one thing. Then you have to determine if I'm willing to risk $500, how many shares is that? That's where you need to determine your entry and your stop loss, especially more on the trading side of things. If there's a $1 difference between your entry and your stop loss, and you're willing to risk $500, well, that's 500 shares. As that increases or decreases the entry and the stop loss, your share size will go up or down. So if it's a $2 risk on $500, then we're trading 250 shares. Now, what this does, and this is probably brand new for some people, but it makes everything so much easier. The reason, raise your hand if you've ever had a stock where you were about to get stopped out, goes all the way down, right down to that spot, right? And you're like, I'm going to move it just a little bit. And I'm going to move it just a little bit. And you move it and you move it. And what was a reasonable stop loss becomes this gigantic stop because you kept moving it, you kept moving it, you kept moving it. You know why that happens? Because before the trade, you did not say, I'm willing to risk $500 on this idea because the initial profit target justifies it. If the stock goes down to my stop loss, I will get out of the position because I've accepted the risk, I've accepted the dollar amount, and I've accepted the probability. It goes down, you're gone, and you just go look for another trade. That's running any business. It's a business expense. The traders, maybe you, definitely me, early in my career, did not accept the risk, and you hope, and you hope, and you hope, and it never comes back. You blow up your account, and now you say trading doesn't work. The stock market's rigged. It's against me. It's not against you. Go back to the very first thing that we talked about today, which was get control. When you get control, now it's up to you to decide how you're going to achieve your objectives. It's no longer up to the market. If what I just talked to you about money management and risk management is new, please go back, rewind that, take notes. It will save you a small fortune and will reduce all the stress. Think about it. Before you even put the trade on, you know you're willing to accept that dollar amount. That's a business expense. No different from paying employees, buying inventory, paying for the lights, paying for the employees. It's an expense to run your business. Every business on the planet has expenses. Same as you as a money manager of your trading account. It's just that your expenses over and above commissions and trading software are the trading losses that we accept as a part of trying to make profits. If that's new to you, definitely watch this, and you definitely want to download this because we're going to break this all down for you. Okay. So getting a little bit deeper into that, that was just this one part of it. We just talked about money management. Okay. Another important part here includes which markets or securities to trade, your goals, emotional characteristics, and choose the right trading style. This is important. There's far too many people trying to trade everything. We get so many. I'm trading stocks. I'm trading options. I'm trading crypto. I'm trading Forex. I'm trading futures. They're trading everything. Be good at something before you try and be good at everything. Prove to yourself you can develop a trading edge for the stock market, which I think is the easiest, especially because you can regulate your position size while you're learning, then expand to other stuff. I actually think stocks and options kind of go together like peanut butter and jelly. You start to use those two together. It's pretty easy to have multiple opportunities. But if you're too spread out, it's going to be very challenging for you to be really good. You want to master something. So as we work our way through this, I want to get into the main concepts here. So again, if you devote just 30 minutes per day, this is going to be a big part of your future. Now, the main component of the trading plan is the concept. We just talked about defining your edge, your objectives. What do you want to accomplish as a trader? I just want to give you an example. We had somebody in our community who has a smaller account, $2,000 account, and is making $200 per week from their account. And they're watching some other members of the community saying, oh my gosh, I'm making X amount, I'm making X amount. And she was actually feeling like she wasn't achieving anything fantastic. $200 per week on a $2,000 account is 10% per week. That is fantastic. Don't compare yourself to anybody else. You have to start with the resources you have for your trading business now. Turn 2,000 into 2,300, 2,300 into 2,800. Build it incrementally, and you'll eventually get to that point where you can have bigger results from a dollar perspective. But remember the percentage gains based on the size of your account. So your objectives need to match your resources. Resources include what are your current capital? What is your experience? What is your risk tolerance? How much time can you actually sit in front of the screen? How much time do you want to sit in front of the screen to watch the stock market? All of these things have to go into that equation. So we're going to keep breaking down these points here. Defining your edge, objectives, we just covered. Now, a trading system, right? A trading system simply means entries, exits, edge, risk management, all those kind of things. Money management parameters, we just covered that. How much are you willing to risk per idea? And then trade review. Let me ask you another question. How many of us spent 8 hours on the couch on Sunday watching football? We watched 8 hours of video of football, maybe more if we're crazy and your wife lets you. Or maybe you're a woman who loves fantasy football and you're watching it as well. We have Jane Ferrari in our community, big football person. The bottom line is, how often are you reviewing? Are you making good decisions? We watched 8 hours of football. I'm a big Mets fan. I'm watching baseball like crazy right now. I wish the Atlanta Braves would go away. They're not. You have to review your trades. You know what you're looking for. You know you took action. Do those things match up? Did you make good decisions? The more you eliminate unforced errors, meaning trades that don't match your trading strategy, eliminate those trades, you immediately start moving closer to profitability, assuming that you actually have an edge that works, okay? So review your trades. Very, very, very important, okay? Working our way down to mindset. Mindset is probably one of the most critical things that we could possibly talk about. Mindset, first, is dealing with adversity. If you're in the stock market, you have to realize there's going to be ups and there's going to be downs. Everybody knows how to celebrate the winning touchdown. Do you know how to handle adversity? When life or the market throws you a curveball and beating you up, and you have to say, wrong, I'm tougher than that. I'm going to make adjustments. I'm going to pay attention to feedback. Mindset is just as important as having a trading strategy. So I'm just going to go through this right now. These are the top parts of the trading plan. I'm going to give this to everybody inside of our Facebook group. You just have to, I'll post it in there and our team will get back to you. Okay. So we're going to actually run down the rest of these. So these are the main core parts of it. Then each one of these segments actually has another segment of building the concept. So these segments here are broken down in the rest of this. Objectives, analysis, defining what you plan to do. What are your ideas on the market? This is important too. How much time can you devote to the market? How much time do you want to devote to the market? Are you distracted? Do you have to pick up the kids at school? All of these things have to factor into what you plan to do. How do you rate your current skills? By the way, that's one of the biggest things that most people lie about beyond a shadow of a doubt. Be honest where you're starting. And I want to hit you with this quote because it's very, very important. We had somebody in our community who was brand new in our boot camp saying, oh, I should have done better. And I immediately said, no, you couldn't have. And they looked like, what are you talking about? Your results and the actions you take are a perfect reflection of your current skill level. So you couldn't have done better. If your skills were better, you would have done better. So your job with every decision, every outcome that you make in the market is to gather feedback and say, was that a good idea? And did I make good decisions? The more of that feedback loop that you have, the quicker it's going to be for you to see positive results, losing less because you're making better decisions and making more because you recognize the conditions when things are really awesome. So working our way through this document, you can see it's pretty detailed. You just got to answer some of the important questions. This is an important one here too. Do you have emotional or financial issues that might affect your ability? Definitely do not be involved in the market if you have other stuff going on. What are your psychological strengths? I just told you mine. Mine is being able to deal with adversity. You have to be. Documenting your needs to align with your goals. What do you need? Do you need a system? Do you need a mentor? What do you need? Do you need better software? Put this into motion and you'll be shocked. So you can see there's a whole bunch of stuff in here to gather. This is basically our trading plan formula, our trading plan template. All you have to do is fill out the details based on your personal resources and what you want to accomplish. You can see that it's actually really, really detailed. All you got to do is go down the list, answer the questions, and you'll come out of it within a week. I promise. Just spend some spare time knowing exactly what you plan to do. All right. I have to call it a meeting, everybody. I have to get ready for our game plan meeting. If you're in our Facebook group, we will make a post in there for you to download of this document. And you can get it. It's only 6 pages, but you're definitely going to want it. If you're brand new and not in our Facebook group, click the link below the video. It's in the description or right below the video, and hop into the Facebook group, and our team will reach out and give you a copy of this as well. All right. Be safe if you're in Florida right now. Wishing everybody the best if you happen to be on the west coast of Florida right now. If you have any follow-up questions to this, definitely leave that comment below the video, and I look forward to hearing from you soon. Have an awesome day, everybody. Take care now.